All right. Good morning, good afternoon, depending on where you're tuning in from. Welcome to this week's mobile coaching stream. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you all. I see Jay coming in, the first person in the chat. Hopefully you're doing well, Jay. Yeah, puts right now doesn't seem to be that great of an idea, especially after the CPI reading. Markets are rocketing higher right now, so we've definitely got some interesting times ahead of us here. But once again, welcome everybody for tuning in here. Hopefully you guys are having a good morning. If you're brand new here, first and foremost, glad you can make it. Secondly, if you're new, make sure as always to subscribe to the channel if you're not already subscribed, and make sure to like the stream. All of that helps us out, doesn't cost you a thing, and allows us to continue to grow this awesome community here that we've built over the last few years, the VV Nation community. So make sure to do that if you haven't done so already. All right. So we should be good on both Facebook and on YouTube. We're live on both places, just checking. Awesome. So, yep, looks like everything is set. So today what we're going to be talking about is helping you guys identify the right stocks to meet your personal investment style. We're also going to talk about how we come up with, the identification for each different investor. So with that, before we get into that though, as always, we'll start off taking a look at what's going on in the market today. Then we'll dive into our topic of discussion. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. Good morning, Mark. Hopefully you're doing well this morning. So with that, taking a look at the very top center of the homepage here, as we can see, the Dow is up 2.6%. NASDAQ is up almost 5.5% here today. S&P 500 up 4% so far for the session. VectorVest Composite up 3.8% for the session. So all the major indices are exploding higher here at the open because the CPI data came in way lower than what was expected. And so that gives higher probability that the Fed may be taking a slower approach to raising interest rates going forward. So markets are excited about that, but we have to keep an eye on the data still. One data point doesn't make a trend. Still need to be cautious. And also, the fact that we're still 7.7% higher from the last week or from a year ago tells us inflation is still an issue. We're still seeing prices rise 7.7% over the course of the last year. So until that settles down even more so, getting closer to that 2% that the Fed typically talks about, we still have a lot of unknowns left in the market. Hey Tushar, hopefully you're doing well. Yeah, Alberto, crazy markets for sure. That's a good way of putting it. All right, so even though the markets are exploding higher here today, as we can see, we still have 3 ticks into the yellow. Therefore, the market is neutral, and VectorVest advocates caution when buying stocks at this time. As always, if you ever want an in-depth comprehensive analysis of what's going on a day-to-day basis, make sure to tune into the daily color guard report found right below that market timing gauge, where we cover what's going on in the market today, what news you need to be aware of, how to prepare yourself for the next trading day. In essence, watching this short, quick video will make sure that you never get caught off guard by anything that's going on in the markets. Then as we scroll down, getting into the color guard, as we can see, we have those 3 yellow lights. We could have seen a green light in the price column here today, but if we look back 5 trading days earlier, we had a red light there. So therefore, today is the only day that we couldn't potentially get a green light this week. And of course, this is a big up day. If we look at the RT and the buy to sell ratio, as we can see, both of those indicators are below that level of 1. So therefore, we couldn't see green lights in those either. Now the RT is looking at the short-term price trend in the market, and it's cast on a scale of 0 to 2. So anything above 1 would show that the short-term trend is up, and below 1 would show us that the short-term trend is down. So at 0.93, it is moving higher day over day and week over week, but still remains below 1. So therefore, the short-term trend in the market will remain down currently. Then we look at the BSR, the buy to sell ratio, which looks at the overall health of the market by analyzing the number of buy rated stocks in a database to the number of sell rated stocks in a database. If there's more buys than sells, the buy to sell ratio be above 1. And if there's more sells than buys, then the buy to sell ratio be below 1, as it is now at 0.89, indicating overall market weakness. Now, the trends of these 3 indicators are comprised to come up with our MTI, or our market timing indicator, and it's cast on a scale of 0 to 2. So above 1 would indicate that the underlying trend of the market is up. And as we can see, we just finally broke above that level of 1 as of today. Good morning, Jahara and Sophia, good morning. Hopefully you guys are doing well. Good morning, Cigar. Glad to see you in here today. So after the MTI, we then look at the trend column, which shows two parts of the trend each and every day. The first part of the trend is what we like to call the primary wave, which is just simply showing the short-term or weekly trend of the market. As we can see, it did turn up as of yesterday and today, since the price of the VectorVest composite is higher than what it was compared to 5 trading days earlier. Now, the second part of the trend is looking at the underlying trend, or the MTI, and since the MTI broke above that level of 1 here today, the underlying trend in the market is back to up now. And last but not least, we finish off with the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out, so therefore we never want to ignore a confirmed call change. Well, right now we still don't have enough upward momentum or upward movement to get it confirmed up, so we still remain in that confirmed down situation as of today. Now, last but not least, taking a look at the advanced declines. And whenever we look at the advanced declines, what we're looking for is at minimum a 2-to-1 bias in a certain direction. So if you're looking to buy a stock that day, you want to see twice as many stocks advancing than declining. And right now we clearly have that. We have about 10% of stocks moving lower and about 80% of stocks moving higher. So we have about 8-to-1 advances to declines currently, therefore telling us if we need to see, or if we need to repurchase or buy a new stock here today, well, we have the advanced to declines confirming that today would be a good day, because this tells us the odds of that stock continuing to rise after we get into it are extremely high, moving along with the overall market. All right, so with that, let's go ahead and get into our topic of discussion here today. Also, we got well over 100 people in here today and only 10 likes. If you haven't already, make sure to hit that thumbs up button right below me. That way it helps us out, continues to grow this awesome community. Doesn't cost you a thing. So if you haven't already and you're enjoying yourself and you like these streams and want to see more of them, make sure to do so right now. All right, so today what we're going to be talking about is how to identify the right stocks for you. You know, VectorVest is a comprehensive trading tool that can be used by any different style of investor. Whether you're conservative, prudent, aggressive, or speculative, it doesn't matter, because we can help you identify the best stocks out of those categories, so that way it can match your trading plan and help keep your risk profile all in line rather than getting out of hand. Because what I've seen over the years is you have some conservative investors, somebody who's looking for long-term, really dividend mentality, where they're not really looking to outpace the market necessarily. They just want to keep up with the overall market and generate some additional income through dividends, that sort of thing. And whenever you start to talk to them and you look at the stocks that they're holding, they hold stocks that may not even pay a dividend and that may be, really aggressive to speculative, meaning they move a lot faster, higher and lower, they have bigger swings. And that person typically isn't comfortable or not happy with their portfolios, because they just can't seem to figure out what's going on, why their stocks aren't performing the way they expected to. And when you break it down, you find out why, you find out that reason why. And that's because, once again, they're not really the types of stocks that person is comfortable with. Now, on the opposite side of things, let's say you have an aggressive investor, aggressive trader, somebody who's swing trading or day trading or really short-term focused. But then all of a sudden they get into these stocks that are more the slow, steady Eddie type of performers that take a while to develop to get to those gains that they set out for. So then they get frustrated because the stock's not going as fast as they want, and then they cut it before the stock ever has really any time to develop, and they're frustrated and grinding, or really just turning their wheels, trying to get their percentages or their portfolio outperforming the market. Well, when you break it down for them and you show them, that helps them realize where their mistakes were, so that way they can adjust their trading plan accordingly and make it fit more of their risk profile or their investment style here. So what we're going to do is we're going to help you guys identify those types of stocks and show you guys how to use them. And Zahora, welcome to the VV Nation, everybody. Welcome to the VV Nation community here. Glad to have you here today. All right, so what we're going to do today is we're going to get into the screeners over there on the left-hand side, and we're going to go to the featured screens. And in the featured screens, we actually have the categories broken down for you. And the way we identify these categories is by using what we call the investment matrix. Now, I'm not going to pull up the investment matrix here today because it's in the VectorVest 7 software, but I will discuss it and what it looks for here. So we're going to start off with the first category of prudent stocks. Now, if you tap on it or tap on that little eye, it gives you definition. And this is finding stocks with above average RS ratings or safety and above average price appreciation potential or RV. So above average means both of these indicators are above the level of 1. This is what we refer to as the best of both worlds, and the stocks are sorted so the highest VSC stocks come to the top. So if you're looking for stocks that have good long-term potential and also less risk, this is really the main focus of VectorVest, then that would categorize yourself as a prudent investor. Now, if we go to conservative stocks, what you're focused on is finding stocks that have above average safety ratings or RS, and these stocks tend to perform better long-term by design. So therefore, putting your primary focus on that RS rating. Therefore, you could have an RV or a relative value rating above that level of 1, but most likely you're going to have, your primary focus is at RS, so you would even accept a stock that has a low RV rating or RV above or below 1. So therefore, less risk, but also lower potential long-term or lower reward overall. Then you get into the aggressive investor, which is basically the inverse of what we saw with the conservative investor. And this is finding stocks that have above average upside potential or a high RV. And these stocks have the potential to move quickly, but may carry some volatility with them. So therefore, stocks with low RS ratings, RS could be below that level of 1, as long as that RV is greater than 1. So let's go ahead, now that we've covered that, let's go ahead and take a look at some of these stocks here. And also for the speculative investor, since we don't have the category for speculative investor, a speculative investor is somebody who doesn't pay attention to the fundamentals at all. So you're just looking at price action. So therefore, the RV, RS, doesn't matter what they are. They could be below 1, above 1, who cares? As long as the stock is rocking and rolling higher, then that would identify you as a speculative investor. And because of that, we don't put that category in here because you're willing to take pretty much anything as long as there's strong momentum behind it. So now let's start off with the aggressive stocks here first and foremost. And just taking a look at the criteria, what we're looking for is stocks with a RV greater than 1. And it's looking at the primary sort being VST descending, and price has to be greater than $1. Volume has to be greater than 100,000 on average. No contra ETFs, and make sure it's on a major exchange here. So if we take a look at the stocks, PTEN is our very first stock, up 6.5% here today. Then you get NOG, VOC, a lot of familiar names here. IMO, Marathon's down here in the list. RES, SGML, which has been a stock you guys keep asking about week in and week out. CVE, a lot of energy stocks in here. DK, INSW. So most likely, a lot of these stocks, a lot of people here today are familiar with. If you're not, well, stick around a little bit. You're probably going to learn something with these sessions here. So taking a look at the very first stock, PTEN. As you can see, the RV, 1.51. RS, below that level of 1 at 0.97. So this stock has great long-term potential, but it does carry a little bit more risk or more volatility to get to that long-term potential. Looking at the RT, 1.88, really strong short-term uptrend. As an aggressive investor, somebody who's short-term focused, you want high momentum as well. And then Everett coming in as a new subscriber to the VV Nation. Welcome, Everett. Glad you could be here today. Hopefully you're having a good time here today. So then after that, all three of these indicators are combined to come up with our master indicator VST, standing for value, safety, and timing. And as we can see, because it's above that level of 1, overall the stock is favorable. Now, if you're somebody who's conservative, you see that RS rating below 1, you wouldn't take this type of a trade. If you're a speculative or an aggressive investor, you would take something like this on the expectations that you're using something for short-term trading so that way you can outperform the market. Go take a look at the next one, NOG. Great long-term potential, but it does have a little bit more risk associated with it. So, therefore, you're probably going to see more volatility in this, which as a trader, you can take advantage of. Looking at the timing, 1.78, still a really strong short-term uptrend, so overall the stock is favorable. Going to the next, VOC, another one. Great long-term potential, but does have a little bit more risk associated with it. You are in a really strong short-term uptrend, so overall the stock is definitely favorable. Looking at the chart, just that quick little look back here at the very top, you can see the big swings higher and lower that as a trader, you definitely want to take advantage of, but as a long-term investor, you probably would pass on it because you wouldn't be able to sleep well at night knowing how much a stock can move any given day. So therefore, once again, if you're an aggressive investor, yeah, this could be definitely an interesting trade. If you're not, probably going to pass on that. So if you're not, let's go ahead and take a look at stocks that may be more interesting to you. Conservative stocks. Pulling them up. Taking a look at the criteria. So this one uses DS or dividend safety as its primary sort. But once again, conservative parameters that it's looking for, price has to be greater than $1. Average volume has to be greater than 100,000. No contra ETFs, and also on a major exchange. So if we take a look at the charts of these, you can see more of a nice steady rise with these longer term. Over the course of the last year, you have a bottom left to upper right pattern in price action, which is what you're going to be favoring. Looking at the RV, below that level of 1, telling us that has poor long-term potential compared to a AAA corporate bond over the next 1 to 3 years. But looking at the safety, 1.42 tells us this company consistently makes money quarter over quarter, year over year, and has done so for a long period of time, therefore indicating less risk here. Then you look at the timing, 1.23. Not nearly as strong as that RT ratings we're seeing with those aggressive stocks, but still in a nice, steady, consistent uptrend. So therefore, the stock is still favorable, especially if you're more of a conservative investor. Where do I get this list from? Don't see it on my app. So Fireblazer, if you're in the app, go to the screeners and go to the featured screens, and they'll be in the featured screens there. So let's go ahead and do one other thing. I'm going to change my lower graph settings here to the earnings per share and take a look on a 1-year basis. Price, as we talked about a second ago, nice steady rise from bottom left to upper right. Looking at earnings, also steadily rising from bottom left to upper right. They did have a dip on the far left-hand side, but since that point, they've been consistently rising from there. Going on to the next one. HEI. Stock definitely has been affected by the overall market, and you saw the drops coming when the overall market took a little bit of a hit, but consistently over the course of the last year, still moving higher overall. Also, looking at the earnings are steadily rising. So these are the types of stocks that tend to outperform the market over that long-term period. So when you're looking at earnings, as we always say, earnings are the engines that drive stock prices higher over time. So if the company's earnings are consistently growing, then that stock price should be consistently growing over time as well. Now, if we go take a look at the analysis, HEI, poor long-term potential, but less risk associated with it. So RV below 1, RS greater than 1. Looking at the timing, 1.31, still in a steady, consistent short-term uptrend, so overall the stock is favorable. Now, as a conservative investor, one other thing you may want to consider is looking down here in the extended data and looking at the dividend information. So as you can see, getting into it, dividend yield or dividend is 18 cents annualized. Dividend yield 0.11%. Dividend safety, which is cast on a scale of 1 to 99, at 97 tells us it's extremely safe, meaning you're not at risk of potentially losing out on that dividend. As long as you're holding the stock, it will consistently be paid out quarter over quarter, year over year. However, if they do monthly, whatever that time frame is, they consistently pay out that dividend, and they've done so over time as well. Then we look at the dividend growth, 14% growth rate on an annualized basis. Not bad. Moving on to the next one, HEIA. So the A shares for the company we just looked at. Same situation. Poor long-term potential, but great safety, so less risk involved with the stock. Nice steady short-term uptrend. Overall, the stock is favorable. See the dividend information? About the same as what we were seeing before. NOC, Northrop Grumman. So this one, poor long-term potential, but way less risk associated with it. No surprise, out of the aerospace and defense sector, you have lots of government contracts coming to these guys, so of course they're going to be consistent, long-term, steady performers. Looking at the price action, nice steady rise from bottom left to upper right. Timing, looking at that, 1.08. It is an uptrend, but it's a weaker uptrend, but still in a short-term uptrend nonetheless. So overall, the stock is still favorable here. And the last one we're going to take a look at for these conservative plays, GL, poor long-term potential, but way less risk associated with it than the average stock out there. You do have a nice steady short-term uptrend, so overall the stock is favorable. Scrolling down to take a look. Dividend safety, 91, so really safe dividend. Dividend growth, 12% a year. Dividend yield, 0.72%. Dividend, 83 cents annualized. So still not bad, getting a nice little extra premium on your stock. All right. Now, taking a look at the best of the both worlds here. We'll go into the prudent performers or prudent stocks. And now, once again, these are going to be stocks that have an RS and an RV rating both above 1. So therefore, it's the best of both worlds because you get great long-term potential and less risk associated with it. So you're not going to really be putting too much of an emphasis on dividends, but some of these still potentially can pay dividends as well. So you can even get the trifecta here, if you will. Looking at the very first one, Super Micro, so SMCI, pulling it up, great long-term potential, less risk associated with it. You're in a really strong short-term uptrend, so overall the stock is definitely favorable. Scrolling down, this one doesn't pay any dividends, but looking at the value, value's at 96.86, the price is at 80.49, so you're still getting a bargain on this stock even with it being in a strong uptrend currently. FANG, great long-term potential, less risk associated with it, nice strong short-term uptrend, so overall the stock is still favorable. We scroll down, looking at the dividend information. Dividend of $7.45 annualized, dividend yield 4.66%, safety 76, so still pretty safe overall, not the highest we've seen, but still pretty safe. Dividend growth 22% annualized. Now, if you want an easy way of analyzing any stock's dividend out there, just focus on the YSG factor, the third row on the left-hand side from the bottom. The YSG stands for yield, safety, and growth, and just like the VST analyzes the overall stock, YSG analyzes the overall dividend that the company pays. So, puts it on a scaling of 0 to 2, and above 1 means that dividend is favorable, below 1 means that dividend is unfavorable. MTDR, great long-term potential, less risk associated with it, nice strong short-term uptrends. Overall, the stock is definitely favorable. And we can go through these one after another and find the same situation over and over and over again. Now, this one, for example, though, great long-term potential, but while it is safer than the average stock out there, not by much. So if you want to be a little bit more prudent or you want to still lean on the side of being conservative but still be prudent, kind of that in-between area, then make sure the stock has an RS rating of, 1.2 or higher. If it's just barely above 1, maybe you'd move on as a conservative to prudent investor. Maybe you would take it depending on your risk profile, but, just make sure that it meets your comfort level before jumping on board with it here. And then we'll take a look at one more here. So RELL, great long-term potential, less risk associated with it. You are in a really strong short-term uptrend, so overall the stock is definitely favorable here. Scrolling down, we do have some dividend information with this one, 24 cents a share annualized, yield 1%, safety 73, dividend growth hasn't grown. Overall, the dividend is not favorable, but once again, this is just an added bonus to the stock. You're really looking for more of that capital appreciation to be carrying you to the finish line rather than that dividend carrying you. Good morning, Chris. Which search on mobile can you use to find stocks that are just breaking out? You probably could use, I mean, the one that I would probably look at there, Chris, would be under the search or the premium watch list here and the daily boomers. That would be my go-to. You may have to do a little bit of filtering there, but that would be my go-to. The other one, let's see. Trying to see what else we have in here that would be good. Price and volume winners would be good. Trying to remember all of the ones that are in here. But yeah, I would go play around with some of these screeners here. But main one I would look at would be the daily boomers from the premium watch list there. All right. So with that, if you guys have any questions regarding anything that we've covered here, if you want to see what your own risk profile is, well, what you could do, pro tip here for you guys, what you could do is build a watch list of your stocks, especially if you have the VectorVest 7 system, and then look at the average of your RV and RS ratings. Now, when you average those out, ask yourself, does that, whatever you get, do those numbers match what you thought you were? If you consider yourself to be prudent and you all of a sudden average your RV and RS scores out and the RV is below 1, the RS is above 1, well, that would be more conservative. So that doesn't really match your goals that you've set for yourself, or your investment profile that you've set for yourself. So therefore, you want to adjust your holdings accordingly to make sure that they match up with the type of investor that you are. So that's one last tip for that one. All right. So with that, if you guys have stocks you want to see analyzed, start throwing them out at me. Let me get them in the chat here. And I'd be glad to show you how fast we can analyze any stock out there in realistically less than 10 seconds. Instead of spending hours upon hours going through scads of data, let VectorVest take all that data, analyze it for you, and break it down into simple indicators, cast on a scale of 0 to 2 to make it easy, so that way you can get usable information to make your decisions upon. All right, so very first one coming in, LPX. Let's take a look. LPX, poor long-term potential, but less risk associated with it, so more of a conservative play. You are in a short-term uptrend, so overall right now the stock is favorable. Apps, APPS, good long-term potential, but does have more risk to get to that potential. You are in a steady short-term uptrend, so overall the stock is favorable. Now, this is one that's more aggressive, and you can see it's exploding here today, up almost 60% here today alone. OXY, great long-term potential, little less risk than the average stock out there, really nice, steady short-term uptrends. So overall, the stock is favorable. This would be more of a prudent stock here. CVE, good long-term potential, but a little bit more risk associated with it, so therefore an aggressive stock. Really strong short-term uptrend, so overall the stock is favorable. Costco, poor long-term potential, but less risk associated with it, so more of a conservative play. You're basically flat on a short-term time frame, so overall the stock is still favorable. Would like to see that timing pick up a little bit more though. We'll analyze NOG. NOG, good long-term potential, but does have more risk associated with it, so an aggressive play. You do have really strong short-term momentum to the upside, so overall stock is favorable here. Let's see, UGP, great long-term potential. You have a little bit more risk associated with it, however. You do have a short-term uptrend, so overall the stock is favorable. CC, good long-term potential, but more risk to get to that potential. Strong short-term uptrend, so overall the stock is favorable here. SOXL. So SOXL, as an ETF, makes it easy to analyze. Whenever analyzing an ETF, because they don't report quarterly earnings or have balance sheets like an individual stock has, the RV and RS are always going to be pegged at 1. So therefore, your primary focus is RT or relative timing. Well, even with it up 21, almost 22% here today, the RT is still well below that level of 1, telling us right now SOXL is still not favorable and is still in a downtrend on a short-term basis, even with the big up day here today. Let's see, QS, poor long-term potential, a lot of risk associated with it, so this is a speculative trade, and a steady decline. Overall, the stock is not favorable. NVDA, good long-term potential, less risk associated with it. You are in a slight short-term uptrend, would like to see that above that level of 1.1 personally, but still in a slight short-term uptrend nonetheless, so overall the stock is favorable. AR, great long-term potential, but a little bit more risk to get to that potential. Nice steady short-term uptrend. Overall, the stock is favorable here. EXROF, XRO, poor long-term potential, a lot of risk associated with it, but you do have a short-term uptrend. However, not enough of a short-term uptrend to offset the amount of risk involved with the stock, so therefore, overall, the stock is still not favorable here. MOD, great long-term potential, a little bit more risk associated with it though. Really strong short-term uptrend, so overall, stock is favorable. SQM, great long-term potential, a little less risk associated with it, however. Really strong short-term uptrend, so overall, stock is definitely favorable here. META, poor long-term potential, but less risk associated with it. You're in a steady decline. Overall, the stock is not favorable for right now. PR, great long-term potential, but a little bit more risk associated with it, however. You do have a really strong short-term uptrend, so overall, the stock is favorable. CPG, good long-term potential, a little bit more risk associated with that to get to that potential though. Strong short-term uptrend. Overall, stock is definitely favorable. DFEN, another ETF, so therefore your primary focus is RT at 1.83, tells us it's in a really strong short-term uptrend, so therefore this ETF is definitely favorable currently. TRGP, and after this one we'll do a couple more here. TRGP, great long-term potential, but you do have more risk associated with getting to that potential. Overall, the stock is in a short-term strong uptrend, so therefore it is favorable. STM, good long-term potential, less risk associated with it. You're finally getting back into a short-term uptrend, so therefore the stock is favorable here. All right, and last but not least, we'll do one more. We looked at all those. AMD, there we go. AMD, great long-term potential, less risk associated with it, so more of a prudent stock. But even with the big up move here today, the RT still remains below that level of 1. So therefore, it is still in a short-term decline. Be patient. Wait for the RT to cross back above 1 before getting into this position. Because RT doesn't just tell you whether or not the stock's going up or going down. It tells you whether or not that stock would be making you money right now or losing you money right now. And I think we can all agree it doesn't make sense to hold on to a stock that would lose us money here. All right, so with that, taking a look back at the markets. The Dow is now up 2.75%. Nasdaq's up 5.75%. S&P 500 up 4.33%. VectorVest Composite up over 4% so far for the session. Overall, we still have 3 yellow lights across the board, so therefore the market is neutral, and VectorVest advocates caution when buying stocks at this time. Jay asked, when is the next Trading for Charity session? So that is tomorrow, Jay, at noon Eastern, right here on the VectorVest YouTube channel. So by the way, yes, for everybody still here right now, every Tuesday and Friday, we are doing Trading for Charity. It's a live stream where we're doing some live trading utilizing the VectorVest software, but also at the same time helping to raise money for Levine Children's Hospital. It's the biggest children's hospital in the Southeast. So I highly recommend, or I highly urge you guys, come hang out with me at noon Eastern as we do some live trading and help us raise some money for Levine Children's Hospital to make this year brighter for the kids that really need it the most during the holiday season. So I look forward to hopefully seeing you guys there as well. And on that, that's going to be it for today. Also, if you want to see more of us, Glenn has his trending Thursday at 2 o'clock Eastern today, where he talks about all the major headlines that are impacting the market. So that way you can stay up to date with all the news that's really driving this market right now. Any promotion for what, Sandeep? What do you mean, any promotion? All right, so looking at the color guard here on yearly subscription. So we do have some giveaways. We have a lot of giveaways left to go. Our next milestone, so we have it set out. It's up to you guys on how many giveaways we do. The more donations we receive to raise money for Levine's throughout the course of the Trading for Charity event, which ends in about 3 weeks from now, the more milestones we hit, the more we get to do. So the next milestone, we have a course giveaway to give away. We do have some annual subscriptions at set for some of those milestones that we'll be giving away, but you have to be there to be able to win some of these awesome gifts and prizes that we have. You have to be there live and attending because we'll do it while we're live. Once we meet that milestone, we'll do the giveaways, but you have to be there to be able to enter the giveaway and be able to claim it. So if you're not there to claim it, we'll just simply move on to somebody who is there. So yeah, we do have some awesome things with that. But tune in tomorrow at noon Eastern, and we'll talk about all those and recap those for you as well. So on that, thank you all for hanging out with me. Hopefully you guys have enjoyed yourselves. If you have, and you haven't already, smash that like button. Go ahead and do so right now. It's only about half of you guys that are still here have done that. So therefore, make sure to go ahead and do so right now. That helps us continue to grow this awesome community. And until then, take care, adios, and I'll see you guys tomorrow. Toodles.